So the rupee's gone down by about 10% over the last 3 months. It's actually come up a little bit today. The market is responding to concerns about changes in American Federal Reserve policy, whether they're going to end quantitative easing. And in common with a lot of emerging markets, including South Africa and Turkey, that have large current account deficits, the Indian currency has come under a lot of pressure. Clearly, the thing that started this is the general move in emerging markets to put pressure on these currencies. But India is peculiarly vulnerable amongst some of these different countries. It has a very large current account deficit in common with others, but it also has other fiscal figures which are pretty dismal. It has a high fiscal deficit, it has bad trade figures. And so when you look at India, not only does it look vulnerable, but it's one of the countries that is least able to respond as well. And it needs a lot of foreign capital to fund its current account deficit in particular. In theory, yes, lower currency should help exporters and boost competitiveness, but India is not a great exporter. Unlike China, India hasn't made its way in the world by selling cheap manufactured goods for export all around the world. It tends to specialize in higher value goods like IT outsourcing, pharmaceuticals, and those sectors are doing better, or will do better, because the rupee is depreciated. But actually, really, India is an importer, and so the problem is that India needs to import a lot of raw materials, a lot of finished goods, and the cost of that is going to go up, and that makes it much more difficult to control inflation, in turn making it more difficult for the Reserve Bank of India to cut interest rates and boost the economy, which has been struggling for the last year. So that's the real problem. I mean, the Reserve Bank of India has been intervening in the currency markets to sell off some of its stock of dollars. Some of the other regulators have also intervened. But the stated policy of the regulator is only that it intervenes to control volatility. So when the currency starts going up and down, or down very quickly is what tends to happen, they will sometimes step in to try and stem that for a while. But they say they're not going to try and hold it at a particular level. That said, if it keeps going down, and there are now people, the rupee is currently at about 60 to the dollar, and there are now people with rather apocalyptic projections that it might fall as low as 70. If it began to go there, then there would be huge pressure on the government to step in. And there are certain things that they can do. They can try and launch special bonds to attract money from people overseas. There are other measures. And, in the final analysis, they can think about putting up interest rates again, which Indonesia did 2 weeks ago and Brazil did earlier this week. This is James Crabtree for the Financial Times in Mumbai.